we've been talking about this lack of a pullback, but did not realize until you gave us that, thank you, that it had been 5 years since we have seen it. It's pretty cool, but does it matter to any kind of a future indicator?
Well, I think what matters is how strong the earnings are that underpin that. And, right now, we've got global growth at 17% nominal when you include the real growth and the inflation. And that bodes very well for continued earnings growth going forward. So, we've got a return from orbit because we're in the stratosphere or the exosphere right now. And there's questions about what that return looks like. But we think the inflation will come down, the growth will remain strong, and that's a great base for the S&P 500.
Yeah, so, maybe buying begets buying, momentum begets momentum. Obviously, there's a lot of tailwinds here for this market. By the way, Mark, you're global, not just here. The European markets have actually been better than our markets. Asia, very strong. Is this truly kind of a global phenomenon?
Well, the recovery has been global. I think one of the things that we've been very focused on is following the reflation trade as it makes its way around the world. And we started with Asia, and then we moved to the United States, and then we moved to Europe. And, we've had some wobbles with Delta, but we're looking ahead, for example, towards Japan, where they really haven't had the reopening yet. And we think that is a market that can see upside as reflation takes hold there as well.
Yeah, you mentioned that. Obviously, there's a lot of concern about the Delta variant or the Lambda variant, whatever may be coming next. There's some positive developments in terms of data out of Singapore, in terms of the vaccinated. By the way, I put that on my social media if people want to check that out. But doesn't sound like you and your team are that worried about this recent rise in COVID cases and, by the way, some hospitalizations with regards to the economy, earnings, or the markets. Why not?
Well, I think that, if you look at where we are right now, first, if you look at the CDC data and the 7-year rolling average of percent of positive cases, for example, in the United States, that has actually started to roll over. It's just one early stat on the Delta variant. But the situation we have, like last week, I think we really had a case where people were worried that we were headed towards stagflation, where the growth would slow, but the inflation would stay strong. And then we had the Fed minutes, which are from now 4 weeks ago, come out when the picture was better and sound hawkish. And I think that was a lot of factors that spooked people last week. But, we don't expect, for example, that the Fed is going to be as hawkish if, the Delta variant is slowing that growth or preventing the consumer confidence. And so there's a lot of forces counteracting each other here. And I think if that inflation proves to be transitory, as we believe, then the Fed is going to have a lot of latitude to move very slowly with any tightening of their policy measures.
Is the market all about the Fed right now, Mark? Is there other things that do it, or really is it, by the way, the BOJ, Bank of Japan, European Central Bank? If you had to sort of rank the importance of central bank support for global equities, where would it fall right now? Is it number one with a bullet?
Number one is COVID. Number two is, I think, the central bank support. And then number three is fiscal stimulus. And you have to watch all three of those, and they play out in different ways. And I think that the central bank story is not just about the Fed. I think the Fed is by far setting the pace globally. But as we see some of these other central banks get a bit more hawkish, say, for example, in the UK, that could create an FX story, and we'd be looking for currencies that where the end of taper or the end of or potentially even rate hikes are in the offing as a new story as we enter the back half of the year.
Where is the best place to invest globally right now? The United States or somewhere else?
I would say the way we would frame it is reflation trade, That means financials, it means materials, and it means energy. And then for U.S. investors, I would say think about playing that reflation trade globally. For example, as I mentioned, towards Japan.